Let's be real, earning $100 a day from dividends sounds amazing, but there's a process to get there. If you're serious about creating passive income streams that work for you while you relax, dividends are one of the most reliable ways to make your money work. But it's not a quick fix. It takes time, patience, and the right strategy. In today's video, I'm going to show you 3 practical methods to help you hit that $100 a day dividend goal. The first asset type will help you generate $100 a day. The second can generate over $300 a day. And the third can generate over $500 a day. In the end, I'll show you how to combine these 3 to build a portfolio that generates a stable $300 a day income. Before we get into the details of dividend strategies, let's start by setting some realistic expectations. You're not going to reach $100 a day in dividend income by investing just a few $100, unless you've found some magic stock that no one else knows about. Building a dividend income stream requires time, patience, careful planning, and reinvesting those dividends back into your portfolio, especially during the early years. Trust me, it's tempting to start spending that income right away, but resist the urge. The real magic of dividends comes from compounding. Think of this journey as a marathon, not a sprint. You're laying the groundwork for something that can keep paying you for decades. The longer you let your portfolio grow, the better it'll serve you in the long term. But first, we need to determine how much you need to invest to reach that elusive $100 a day mark. So, how much do you need to invest? Well, that depends on a few key factors: the types of dividend investments you choose and the dividend yield you're working with, which is the percentage of your investment that gets paid out in dividends each year. For example, if you invest $10,000 in a stock with a 5% yield, you'll earn $500 in dividends annually. Different investments have different yields, and today we'll look into 3 options, ranked from stable investments to growth options. I'll stick with a $10,000 investment and explore 3 different strategies to see if we can achieve our goal of earning $100 a day from dividends. But first, I need to throw a little caution your way. While I'm going to show you ways to achieve $100 a day in dividend income, there's no magic stock or fund that'll give you that without some risk. It's easy to get lured in by investments that offer high yields, but with higher yields often comes greater risk. These stocks or ETFs might have volatile prices, or worse yet, they might cut their dividends during tough economic times. For example, I won't talk about covered call ETFs because, while they can offer high yields, they also come with significant risk, including limited upside potential and the possibility of losing money during market downturns. On the flip side, more conservative, slower-growing options might feel like they're taking forever to reach your goal, but they offer the kind of long-term stability that helps you sleep better at night. As we go through these 3 strategies, remember that your approach should be tailored to your personal risk tolerance, how quickly you need the income, and your overall financial goals. One thing's for sure, you don't want to put all your eggs in one basket. Diversification is your friend, and it'll help balance out the risks and rewards. That said, my first go-to option number 1, is Dividend Aristocrats. Now, I know the term aristocrat might make you think of royalty and fancy parties, but in the investing world, Dividend Aristocrats are the royalty of consistent dividend-paying stocks. These are companies that have not only paid dividends for at least 25 consecutive years, but have also increased their dividends every year during that time. Dividend Aristocrats aren't as flashy as some high-yield stocks, but they're the definition of stability. These companies have proven they can weather economic downturns, financial crises, and anything else the market throws at them. While their dividend yields tend to be lower than those of REITs, usually in the range of 2 to 4%, their steady dividend growth, backed by stock price appreciation, makes them a powerful tool for long-term income generation. One great example of a dividend aristocrat is Watsco, a company that distributes heating, ventilation, and air conditioning equipment. Watsco has consistently paid and increased its dividends for over 25 years, making it a rock-solid investment for anyone focused on dividend growth. It has a current dividend yield of 2.12%, backed by a strong dividend growth rate of 19.06% on average each year. So, let's crunch some numbers. Starting with a $10,000 investment in Watsco, you might earn around $200 in dividends annually. While that might not seem like much, the magic happens when you factor in dividend reinvestment and Watsco's ability to grow its dividends over time. With an average annual return of 19.19%, your portfolio could grow to $68,948 in 10 years. After 20 years, it could be valued at $474,950. And after 30 years, that $10,000 initial investment could turn into $3.2 million, with annual dividends of $54,812, which is around $152 a day in dividend income. As I've preached, the key here is patience. Dividend aristocrats like Watsco are all about slow and steady growth. While their yield may be lower than other options, their consistency and long-term dividend growth make them invaluable in building a reliable income stream over time. Next on my list is REITs, real estate investment trusts. REITs are an excellent choice for anyone who loves the idea of investing in real estate but doesn't want the headaches that come with being a landlord. No late-night calls about leaky faucets, no chasing tenants for rent. REITs let you invest in income-generating real estate without all the hassle. They own and manage properties like office buildings, shopping malls, apartment complexes, warehouses, and even data centers, giving you exposure to a wide range of sectors. So why are REITs a great way to work towards that $100 a day goal? Well, it's all about those high dividend yields. REITs are required to distribute at least 90% of their taxable income to shareholders in the form of dividends. That's why REITs often have some of the most attractive dividend yields, typically ranging from 4 to 7% or even higher. This makes them an appealing option for investors looking to generate strong, consistent income without the stress of property management. Many REITs offer yields that are much higher than what you'd get from traditional dividend-paying stocks, like AGNC Investment Corp, which has a yield of 13.64%. That makes it an exceptional choice if you're looking to build a strong income stream relatively quickly. However, remember that with higher yields often come risks, such as price volatility and the possibility of dividend cuts during economic downturns. But one REIT stock that has withstood the test of time is CubeSmart. They specialize in self-storage facilities, which may not sound glamorous, but it's a solid business model. People always need storage, whether they're moving, downsizing, or just need extra space for their stuff. CubeSmart has a strong track record of paying dividends and growing its revenue over time. It has a current dividend yield of 3.74%, backed by a good dividend growth rate of 14.98% and a respectable share price appreciation of 11.59% on average each year. If you invest $10,000 in CubeSmart in the first year, your investment will be valued at around $1,533, and you could earn about $374 in dividends. In 10 years, it could be valued at $43,942. Fast forward to 20 years, and it has the potential to reach a valuation of $223,400. By year 30, your portfolio could be worth over $1.3 million, with monthly dividends of $942, which breaks down to about $314 a day. CubeSmart offers the potential for capital appreciation, meaning the stock price may rise over time, increasing the value of your investment. Plus, by reinvesting those dividends back into CubeSmart shares, you're increasing the number of shares you own, which leads to even more dividends down the road. Now, if you think $3 and $14 a day is great, wait until you see the last option, which offers more than $500 a day. In the end, I'll show you how to combine these three to build a portfolio for a stable $300 a day income. Finally, the last strategy is high-yield ETFs. If you're looking for an investment option that offers diversification with minimal effort, ETFs are a great choice. They pull together a variety of stocks or bonds into a single investment, giving you exposure to multiple companies without having to buy each stock individually. This helps spread your risk while allowing you to earn dividend income from a broad range of companies. High-yield ETFs focus specifically on dividend-paying stocks, making them an excellent choice if you're trying to build a reliable income stream. One particularly interesting high-yield ETF is ProShares Ultra Pro Dow 30. This ETF tracks the performance of 30 of the largest U.S. companies, most of which are known for paying steady dividends. While the yield on ProShares Ultra Pro Dow 30 starts out relatively low at 7.8%, it has a very strong dividend growth rate of 26.27%. The ETF also has the potential for significant capital appreciation of 19.48% over time, which makes it a great long-term investment. So, let's run some numbers. With $10,000 in ProShares Ultra Pro Dow 30, in the first year, your portfolio could reach a valuation of $12,261. In 10 years, your portfolio could grow to $64,976. Give it another 10 years, and by year 20, it has the potential to reach a valuation of $469,880. Fast forward to 30 years, and your initial investment could grow to nearly $3.9 million, with annual dividends totaling $82,159. That's about $225 per day in dividend income. High-yield ETFs like ProShares Ultra Pro Dow 30 offer a mix of price appreciation and dividend income, which makes them a solid choice for investors looking to diversify their portfolios while working toward that $100 a day goal. They're also relatively hands-off, so you don't need to worry about picking individual stocks, and you can reinvest those dividends automatically to let your portfolio grow over time. So, now that we've explored 3 different ways to reach $100 a day in dividends, what if we put them all together into a portfolio? The key to building a successful dividend portfolio is diversification. By spreading your investments across different asset types, such as REITs, Dividend Aristocrats, and high-yield ETFs, you're minimizing your risk while maximizing your potential for growth. Let's take the average dividend yields and growth rates from CubeSmart, Watsco, and ProShares Ultra Pro Dow 30. By combining these investments, you could create a portfolio with an average yield of around 2.21%, a dividend growth rate of 20.24%, and an average annual return of 16.75%. This blend of high yield and stable dividend growth gives you the best of both worlds, the potential for significant income now and steady, reliable growth over time. Here's what that portfolio might look like over time. Starting with a $10,000 investment, after 1 year, your portfolio would be valued at $18,960. After 10 years, your portfolio could be worth over $588,000, with annual dividend income of $14,730. In 20 years, it has the potential to reach a valuation of $3.75 million. Your portfolio could grow to over $2.7 million, generating daily dividends of $367, well over our $100 a day goal.